So the title of today's stream is The Worst Trading Week of the Month. Some of you may understand why I titled it that, but for those of you that don't understand why, I'm going to explain it to you so we can all get on the same page here. There are always opinions about fundamental news events, Forex news events, economic news events that we pay attention to as traders. People will say they matter. People will say they don't matter. Some people will say they kind of matter. To me, there's a couple of main events that do clog up call it the trading tube with noise. Those events being FOMC statements, bank rate statements from central banks, and non-farm payroll or any unemployment numbers that come out of the dollar, specifically the US dollar, but also any other major currency, the euro, the pound, the yen. So today, this week, it's been very choppy. Now, James has been able to call a couple of great trades. So if you're in the VIP chat, you're probably up this week with us, which is great. But still, even that great trade, one of the great trades he called on GU, that trade only moved like 1.5 hours. It didn't have a lot of gas in it because the market was very choppy. But if you looked at GU now, 2 days later, it is lower than where we were short already. So my point is that these moves, even though they're presenting this week, they tend to be choppier. They tend to come back up and maybe hit your stop loss and profit. Or maybe they tend to just go sideways for you when you take the position. And people get caught up and they wonder, why is that? Why is that? Well, I'm going to explain it to you. So if you go to Forex Factory, it's a free website. You can actually see the news events every single day. What we really want to pay attention to, like I said, are FOMC statements, bank rate statements, and NFP or unemployment numbers, especially on the US dollar. So if you take a look, yesterday, Wednesday, November 3rd, we had an FOMC statement coming in at 2 o'clock. Now, the reason why that's important is because before 2 o'clock, everyone's waiting to see what the Fed says. And even though you're not trading stocks, if you're a Forex trader like me, even though you're not in the stock market, these currency pairs, people that are trading them at banks or the algorithms that are trading them, wait to see the result of that news event and react on it. And we also know that a lot of amateurish traders place pending orders going into major news events to try to catch volatility. So there's a lot of uncertainty, a lot of volume that all comes together at once, which creates some unknown or unwarranted reactions. And that's why we not only see the chop going into the event, but when the event happens, if you look over at the screen here, you'll see, if you take a look at US 30, when that event happens, look at the rip here on US 30 compared to what it did the entire day before. It erases the entire drop that it did overnight going into the stock market open, and then at 2 o'clock it takes off. All day stocks were bearish, and then just when the Fed starts talking, it takes off here, and you can see where that volatility comes in. That volatility is seen on currency pairs as well. If you look at, let's just go to Euro USD, you can see the volatility here at 2 o'clock yesterday when that Fed statement comes out. Now, it's not just the fact that it shakes it up right here when the news comes out, but it's the consolidation that can happen beforehand. So we had that on Wednesday. Today, we had bank rate statement for GBP, where the vote was slightly different than normal, but the official bank rate stayed the same at 0.1%. Now, look at what that high impact news did to the GBP pairs. Look at GU today. Huge bar on the 15-minute chart here, right when that news comes out. So you could say, if there was clear trend, we would say, oh, that we knew that was going to move lower on news. But if you read the chart the way that we do at ASFX, you know that there's no clear trend. This market sentiment line is undecided. All the market sentiment lines here, all the EMAs were actually bullish overnight. They just flipped at the end of the Asian session into the London session. So there was indecision. It wasn't very clear where news was going to take this. So you could say even here, beforehand, the consolidation, the indecision, whatever it is there because of that news event coming. And then tomorrow, if you look on Friday, we have the non-farm payrolls and unemployment numbers for the dollar and for the Canadian dollar, the US dollar and the Canadian dollar. So with that coming tomorrow, now everybody's waiting for that to see what the reaction is to that. So the reason I'm sharing this with you guys is because I want you to be aware that there are certain things that are out of our control as retail traders. And if we choose to play in that game, we are literally making it easier for your broker, the bank, whoever, call it the market, to take your money. When these news events are avoidable, these news calendars are all over the internet, and there's just no reason to be attached to trading a week where we know there's always consistently indecision in the market. It's always the first week of the month in particular that our backtesting data is a little bit less profitable, that our live trading data is a little bit less profitable. So any time we know we're going into that first week of the month, if you look back at my Discord chat, I said it on Friday, coming into this week, I said, be cautious, don't be greedy, take profits. Let's come back for that second week which will be next Monday, and we'll be ready to roll. So I hope that that clears it up for everybody, and now you understand why this first week of the month is always going to be the toughest trading week of the month, especially if you're trading a technically based system.